It needs to be on the radar, and specifically you need to pay attention to lending standards and whether or not we get into an over-leveraged situation, because that's where the trouble is going to be, and you're going to start seeing it with high-yield debt first, where credit spreads are still pretty good, but they're not great, and then you're going to start seeing it in the small-cap sector, and that's where you want to watch out.
Brian, how about this from the Fed chair, the former Fed chair? Is she on to something?
The former Fed chair who in June of 2017, which is a year and a half ago, said she didn't think we'd see another financial crisis in her lifetime. That was when she was closer to power. Now she's out of power. I think this is politics. I don't think it's real. If you look at corporate assets, they're at an all-time record high. Corporate profits, they're at an all-time record high. Corporate delinquencies are very close to a record low. Corporate cash is close to a record high. There's just no way to compare this debt level to any period in history where we had a crisis coming. I just don't buy it. There's a lot of debt. And by the way, if you go back over the last 300 years, we've had more debt each and every kind of 10-year period, if you will, over 300 years. That's the way the economy works. Doesn't mean it's problematic.
Paul Jones, Gundlach, Jay Powell, nobody knows what they're talking about. Nobody knows what they're talking about.
Hey, you know what? You guys had me on in April of 2016. That's the last time I was on CNBC. I wrestled a bear then. I said the market would be up. Now I'm on 2 years later. The market's up 25%. If you don't have me on again until 2020, I bet the market will be up another 25%. So they were all bearish back then. They were wrong. I think they're wrong now.
Okay.
You know, Oliver, you brought up earlier what's going on with lending standards. So we've gotten a lot more strict with what the banks are doing as a result, in part of the crisis, with our regulations. But then you've got these other institutions that are not as heavily regulated. Quicken Loans, Freedom Mortgage, Loan Depot, they're in the top 6 lenders for 2017. They're not subject to those same regulations. Isn't that potentially a risk if banks are tighter on their lending standards and people are then going to these other institutions?
It is, but even banks have lowered their lending standards somewhat in the last couple of years compared to just immediately post a crisis. Again, and Janet Yellen did a very good job, I thought, in this speech, differentiating from risks in the financial sector versus non-financial sector, and that's important. I think Brian makes some very, very valid points, but the key here is that we're coming off ultra low, near zero, or effectively zero interest rates, and so your debt servicing costs are going to go up when you have to refinance some of this maturing debt. And that's one of the areas of problems for especially smaller and not so strong companies.
Brian, I mean, look, you also said the economy was fine in January of 2008. So
I did.
I don't know what you're trying to throw back. I don't know what you're trying to throw back at us. But I mean, we're not saying that this is necessarily, and neither is the former Fed chair saying that this is a problem that's going to blow up tomorrow. But if the economy slows, if rates rise, companies have taken on a lot of debt and they've borrowed it for next to nothing over the last 10 years. Right. She and others are just trying to raise potential risks that could be in the system. Nobody's calling for another 2008.
Yeah, well, here's the deal, Scott, and this is one of the things that we've had a fight about over the years, and that is you don't pay attention to mark-to-market accounting. And that's what we had in 08 and 09. We don't have that anymore. So even if we were in the kind of debt problem that we were in 08, we wouldn't have the same problems today as we did in 08. I was begging the Treasury Department and FASB and the SEC to change mark-to-market accounting all during 08, and they wouldn't do it. And if they would have, like they did in March of 09, we never would have had the crisis that we had. Now, having said that, I've been bullish the last 9 years, and how many times have we been told that the world's about to come to an end, whether it's Grexit or Brexit or Turkey or Cyprus or all of these different student loans, and now it's corporate debt. And I get it that we're in a correction and people have emotion today, but corporate debt isn't a problem. Yes, corporate debt's at a record high. So is, by the way, the consumer debt. but so are consumer assets, and so are corporate assets. So are consumer earnings. So are corporate earnings.
Right. Today.
Today, of course. And so when you have record profits, record assets, record earnings, record low delinquencies, the corporate debt doesn't appear to be a problem. And of course,
record borrowing at low interest rates.
Someday we're going to have a recession. Someday. I agree. But I don't see it any time in the next couple of years.